Hi everyone, welcome back to my channel. In today's video, we are solving AS level October-November 2021 accounting paper, variant 11, duration 1 hour. If you are not subscribed my channel yet, please subscribe and continue watching. I am very happy to know that my videos are very useful to you in your examination. So the first question, let's start. Question number 1. A trader keeps full set of accounting records. Which statement is correct? They are given different options. Credit notes issued, recorded in sales journal. That is wrong. Credit notes is the sales return. Always enter in the sales return journal. Sales invoices recording in the sales journal, not in the general journal. Next, sales account is kept in general ledger. So the correct option is C. Question number 2. The total of the discount column in the 3-column cash book were debit side 320, credit side 140. Cash book discount column. Debit side discount means discount allowed, because in the cash book all the receipt enter on the debit side. When the business receive cash, sometimes they give cash discount to the customers. So discount allowed comes on the debit side. While when the business pay the cash, sometimes they are getting discount from their suppliers. Always the payment shows on the credit side of the cash book. So the credit side discount is discount received. What is the question? What entries made this total posted in the nominal ledger? Accounts debited, accounts credited. It's easy. Debit side discount allowed 320, discount received 140. So let's see. Discount allowed not 140. Discount allowed 320, discount received 140. Correct answer is option B. Question number 3. A company sold one of its delivery vehicles for $2,800 after 2 years of use. What is the original cost? Original cost given 6,500. The company, they are given the selling price, they are given how many years they used. They are used 2 years. Original cost is given. Next, depreciation 30% per annum using reducing balance method. What is the question? Question is, what was the profit or loss on disposal? How to calculate profit or loss on disposal? Is equal to, profit or loss on disposal is equal to net book value minus selling price, disposed price, selling price. So first we have to calculate the net book value after 2 years. So net book value we have to calculate. First year, what is the depreciation? 6,500 multiply depreciation is 30%. 30 divided by 100. How much it comes? 1950 is the first year depreciation. Next, second year depreciation. Here the method is reducing balance method. Reducing balance method means second year onwards we calculate on net book value. So first we have to calculate the net book value. 6,500 minus previous depreciation 1,950 is equal to 4,550. So the second year depreciation we calculate on 4,550 multiply 30 divided by 100, that is 1365. So now the net book value after 2 years. What is the net book value after 2 years? Net book value after 2 years 4,005. The total depreciation, net book value after 2 years means total depreciation. 6,500 minus 1,950 minus second year depreciation 1365. What is the amount? Total depreciation is, after the depreciation, the amount is 3,185. So now we can calculate. We got the net book value. The selling price is 2,800, but our net book value is 3,185. So net book value minus selling price 3,185 minus 2,800. Still we have some amount balance. What is the amount? 385. We didn't get our full amount. 3,850 is the net book value, but we sold for only 2,800. So 385 is still we have loss. Correct answer is loss 385. So option B is the correct answer. Next, question number 4. A trader depreciate loose tools using revaluation method. Small items depreciation always we do using revaluation method. Which account is credited at the end of the year to record depreciation of loose tools? Loose tools account only. We do the loose tools account. Depreciation of loose tools not credited with the loose tools. Depreciation of loose tools, no. Disposal account, loose tools will be debited in the disposal account. Then loose tools depreciation is credited with loose tools. C is the correct answer. Then provision for depreciation, it will be credited with income statement. Correct answer is C. Fifth one, a business sold one of its non-current asset. The following information relates to this asset. They are given purchase price, sales price, and also they are given as the depreciation. What was the effect of this transaction on the net asset in the year? Net asset means fixed asset minus working capital change. That means current assets minus current liabilities. So the net asset change, the effect, what is the effect? Purchase price is 50,000 and depreciation is 20,000. So the net book value of the asset was 30,000. Asset is going 30,000 because we are disposing. While the selling price 60,000 is there. 60,000 when we sell the asset, they are receiving 60,000. So the effect is 60,000 30,000 is selling. So minus 30,000 plus 60,000. Very easy. The effect is plus 30,000. It means increase in net asset 30,000. Correct answer is C. 6. Which item will be found on the credit side of the sales ledger control account? Sales ledger control account is the total debtors account or trade receivables. So ledger sales, ledger control account is on the debit side. We always enter increase in debtors or increase in trade receivables. Credit side, decrease in trade receivables. The question is, what is the credit side of the sales ledger control account? What is decreasing the total trade receivable? Allowance for recoverable debts. Allowance of recoverable debt means that is the provision never enter in the sales ledger control account. Contra with purchase ledger. Contra with purchase ledger means same like payment. We are adjusting the money with their purchase. So the contra will come on the credit side. Irrecoverable debt or bad debt. When there is any debtor failed to pay the money, that also come on the credit side, bad debt. Refund to customers who paid. Refund will always come on the debit side. So our question is on the what is on the credit side. Credit side, contra entry and bad debt. So 2 and 3. Correct answer is option D. A business omitted discount allowed $700 from its trial balance. During the year, machine had been sold for cash 500, but the only accounting entry made was debit in the bank account. What is the balance on the suspend account before these errors are corrected? Suspense account are the temporary account business open when there is the difference in the trial balance. So this error will bring the difference in the trial balance. That difference will be the balance of the suspense account. So we have to check the suspense when we are opening the suspense account. If the trial balance difference is on the debit side, suspense balance will come on the debit side. If the balance on the credit side, it will come on the credit side. So first we have to check how it affect the trial balance. This arrays, how this affect the trial balance. Discount allowed 700. Discount allowed, actually where you will enter discount allowed in the trial balance, that will come always on the debit side. So debit side, if we are not entering, the 700 difference will shown on the, this is debit, this is credit. So debit side it will be 700. While machine sold 500, this ended only on the bank account. So when we are selling machine, sold machinery, that is the income. So credit side 500 also the difference is there. So the net effect 700 and 500. Debit side 700, credit side 500. The difference will be 700 minus 500. Still the difference is on the debit side 200. The net effect debit side. The other 500 will be like going as compensating other. 200 is on the debit side. So suspense account balance brought down will be on the debit side 200. So the correct answer is 200 debit. 8. Felix drew $200 out of his business bank account in order to top up his petty cash float. When we are withdraw cash from the bank account will decrease. When recording this transaction in his cash book, revise the entries. There was the mistake also. Revise the entry means it came on the debit side. When this amount instead of credit side, it came on the debit side, means that is the double effect. 200 into 2, 400 on the debit side. It become 400 is the difference. It shows like 400 difference. They are not ended on the actual side, credit side, but reverse entry opposite side means debit side. It will become double effect 400. What is the question? Despite the error, the bank balance showing in his cash book was equal to balance on his bank statement. With this error, cash book and bank statement is equal. How was this possible? How was this possible? Actually, 400 is on the debit side. Cash book shows 400 overstated more. Cash book shows overstated more. So the bank statement will be showing actually less than 400. But by mistake, now it shows equal. It shows equal means what will be the reason? There was an uncredited deposit. No, it will again increase the bank statement. Uncredited deposit, no. There was an unpresented check. If there is an unpresented check, bank balance will not decrease. So, but it is 200. Our amount is 400. So, that also wrong. Actually, that is 400. There was an unpresented check 400, that is the bank statement mistake. It will make it 0 with the cash book mistake, 400 on the debit side. So the correct answer is D. Question number 9. A business had calculated draft profit for the year. The following items have been discovered. They are given some items. What is the question? Which of these need to be adjusted to calculate correct profit for the period? What is the correct profit for the period? To adjust correct profit for the period, only we take the items which is affecting the income statement. The item affect the balance sheet, no need to take. The item not affecting the income statement also, no need to take. Only the item affect the income statement, only affect the profit of the period. So let's see. The first one, a customer has been declared bankrupt, unable to pay the amount. Bad debt. Bad debt always we enter in the income statement or no? Where we enter the bank debt? Bad debt we enter in the income statement and balance sheet. So that is it will affect the draft profit. Unsold goods, sale or return basis have been included in the inventory. Unsold goods, the goods sold, sale on return basis actually not, we are recording as a sale, so it will not affect. Next, third, rent paid in advance has not been included. Prepaid rent, actually we enter in the income statement, so this will affect the draft profit. Next, the owner's cash drawings have been entered into the owner's capital account. This is actually entering in the balance sheet, so this will not affect the draft profit. So the correct options are 1 and 3. So what is the correct answer? Option B is the correct answer. Next, question number 10. The following information has been extracted. The statement of financial position of a sole trader. They are given current asset, non-current asset, current liability, non-current liability. then profit and ROIC. What was the balance on the capital on 31st March? They are asking us the closing capital. Closing capital means opening capital plus drawing minus opening capital plus profit minus drawing. So, closing capital is equal to opening capital plus profit minus drawing. But here opening capital is not given, so we cannot calculate this equation here. So we can apply the accounting equation. Accounting equation, capital is equal to assets minus liabilities. So here we can do assets minus liabilities. Assets are, we add all the assets, we deduct the liabilities. Non-current asset plus current asset minus current liabilities minus non-current liability. Assets minus liability is equal to how much? 119,000. Asset 130,000 plus 32,000 minus 18,000 minus 25,000 is equal to 119,000. Correct answer is option B.